So I'm going to start, and then soon we'll have a microphone. Good morning to you all. Thank you, CROSSTECH, for the invitation. It's incredible to be talking with you guys about IPOs in general. I'm a partner at Pinheiro, Neto, Advogados here in São Paulo. We have been working in several IPOs of tech companies recently. I think the environment changed a lot from 5 years ago to today. Maybe now is not the best moment ever, but we still have a lot of tech companies looking for IPOs, and I'm sure it will be back soon. So yeah, let's start. So I have Gene Negro here with me. You guys, I think you all know from the reaction. He's a business. Let me read here for you, Gene. You're a business development at Remitly, one of the largest private remittance companies headquartered in the U.S. I have Gabriela Vieira as well, who is a senior VP of compliance at dLocal, and my xará, how it's in Portuguese, Guilherme Ribeiro, who is business development at Payoneer. So thank you all. Good morning. One of the things I was actually reading these days. I'm gonna start with the question we have agreed, but I was just this new what is in the news, like Elon Musk buying Twitter, and one of the reasons he has been telling investors as well, Twitter cannot really do what I want they to do as a listed company, because they cannot cancel boots, things like that. It will change a lot their numbers. They would never do that as a public company. So as a private company, just in the other direction, I'm sure I could do it. And I'm just telling this quick story because like the first question we were thinking about is, when is the right time for the IPO? When the companies, when you have been through this process, when do you believe is the right time and for this decision to be taken? How do you know if you're ready? Because sometimes the companies are still in a stage that maybe they're not prepared for the market scrutiny and all the questions that you'll be receiving, the disclosures that are required. So how do you know that? How do you take this decision? Maybe Gene, you can start.
Okay, I'm expressing my own opinions, just for the record. I am not speaking on behalf of Remitly. To be brutally honest, you never know when you're ready. You think that you're ready. You do all this analysis, but the reality is that you don't know when we're ready. And before working at Remitly, I worked at Zoom, and before that at Western Union. At Zoom, we thought that we were ready. We did a lot of research. But everyone knows the story, what happened with Zoom. It's very painful to say, but at Zoom, we failed as a public company. And we can go into the details later on. Zoom was acquired by PayPal. So to answer your question in a nutshell is that it's very difficult to see what's ready. You can also see what happened to companies that went public last year. What's happening to the market, just what's happening to the market yesterday. It's very difficult to tell. And if someone tells you that you can do the timing, it's not true. You can hire Goldman Sachs, Merrill Lynch, Bank of America. You have to pay them millions and millions of dollars. But they only do a projection, and then they do the IPO, and then go for the next deal. So the answer to your question is very difficult to know what's the right timing. You think that you know, you believe that you're doing the right thing, but you really don't know.
Thank you. I cannot agree more. I do believe that maybe you're never really ready for an IPO, just because it's a new stage, it's a new phase. So everything you've done before, you've done through different premises, bases in different level of scrutiny, as you all said, Guilherme. So I do believe that the decision is much more because you want to grow, because you want to have visibility, you want the investment, you want to have more access to a rapid growth and etc. But you will be surprised throughout the process. I think that what actually could help is if the company already has a mentality of chasing things, if they are already used to pressure, they are already used to try to be better, to try to be more efficient. If they already have the DNA, at least they could struggle a little bit less. But I think it's still experience that when you go through, you realize you are entering in a different phase, you are entering into a different reality, and yeah, it's a difficult process, but it's very rewarding as well.
Yeah, if I may comment as well. So I also talk about the perspective of myself, Guilherme, not in name of the Payoneer company, but analyzing my background.
I want to add that disclaimer as well. Just I was missing this one. Apologies.
You have been trained by your lawyers.
The disclaimers. Analyzing a few companies that I've helped out here in Brazil, the stages of them, and then like into your question, right? When is the perfect timing? Some companies have to analyze the forces that are present in terms of that decision are really strong. Sometimes are macroeconomic decisions. Sometimes are just the investors' will to actually invest in a specific niche market, and then analyzing internally, like, is the product ready? Has the product matured? So these forces that have to combine together are really strong and are really difficult decisions to do. And if you analyze, like here in Brazil, for example, we have a very specific use case, like the company Avant, that wanted to open the capital. Like their CEO thinks that the company is ready, but the market's saying no. So like, what is the right decision, right? So I guess this decision, the forces has to be an alignment from, let's say, from product, from market, and then even depending on your structure, if you take the Silicon Valley approach, right, in terms of stock options to the employees, like you pledge this liquidity event to your employees, right? So when are you going to actually deliver what you have promised? So I guess all this subject matters, all the psychology issues that are involved in this process are really, really complex. So yeah, basically, I guess the perfect timing is very, very difficult to reach upon, basically.
You know, thank you. I agree with you with your answers. On my perspective as a lawyer, I would say as well, if the shareholders are prepared as well, as the mentality of being a listed company, having new shareholders. This sometimes I see that it's difficult to internalize in a company that is still not listed. How to be prepared to that. But why you think why NASDAQ and why the US? Why would you not have? I mean, in Brazil we had some IPOs of tech companies in last year, but I would say maybe half of the Brazilian business have been listed abroad of the tech business. And why would you do that? Why you think, Gene, comparing Brazil to the US or as a dual listing, why NASDAQ has this kind of why we call it a dream sometimes?
Well, we can talk about the dream or a nightmare, okay? I think that what happened is in the US so far, the rules of the game are very clear. So if you have any legal dispute, you know that the courts are going to be very objective. And in many other countries, that's not the case. And I'm not talking about any country in particular. That's one of the reasons that in the case of all the companies that I have worked, the contracts must be subject to US law. We can compromise on the state, any state, but they have to be subject to US law. And I think that when they talk about the NASDAQ, the reputation, there is no monkey business. So I think that's the reason. You have other companies and they also listed in London.
Yeah. Or nice, you know.
Correct. So I think that has to do because of the strength of the legal system.
It's interesting. In Brazil, we're still developing the market, and the regulation changes a lot. The Brazilian regulation is going to change now again, maybe simplifying, maybe it's an evolution. I think it is, yeah. But it's interesting. It's an interesting approach. And
if I may add as well, I guess there's also a question of the liquidity which is offered, right? And the knowledge of the investor that is willing to pull capital into that specific niche market. Of course, NASDAQ, as the stock exchange itself is tech-based, I guess this offers a facility for those who want to leverage this capital. It's a much easier process in terms of trust of the relation between the company that is wanting to go IPO and that of those investors that are willing to actually buy the shares. So I guess there's also a liquidity relation here.
Gabriela, you want to add something?
Sure. So I think it's I agree. It's maturity of the market regarding volumes, regarding years as well. I think also, just to add, maybe also the voting rights is something relevant, historically speaking, because there is more flexibility in NASDAQ in the US of voting rights and how to maintain certain, it's a polemic issue actually, but you can maintain certain power through the shareholders at the moment of the IPO, while we know that in Brazil, for example, you have more rigid rules about that. And it's also connected to the DNA of the company. I would say like dLocal, for example, has been an Uruguayan company which has presence in so many jurisdictions. It also makes sense to go to an international forum when doing IPO. So I think that at least for the company, it also made sense to be in an international stage with international visibility as well, right? Because you get more visibility internationally speaking when you have your IPO in NASDAQ in the US.
Yeah. One of the things that you said, I would like to point the voting rights. This is my area. And it is true now in Brazil, most of the IPOs are in the Novo Mercado, which is one share, one vote regulation. But we do, I think this is something the Brazilian investors are still very, they try to avoid, but we do have the capability of creating something very similar to what would be a super voting. So we have, for example, we have worked in our firm with the Azul IPO, their line company. It's a super voting system. Track and field, which is not the track and field of sporting clothing, it's a super voting. But it is still, when you hear how the IPO was done, you say, well, it was difficult to tell the story in Brazil of super voting. Maybe this is something that will change with time. The corporations law has changed recently. So it's something that we probably can address. If it will affect the results, then it's a different question. But I think legally we would be able to address. But it's true, most of the Brazilian companies have this. The Brazilian business that IPO'd abroad have used this structure. I think all, actually. And Guilherme, I would ask you, what are the main challenges and difficulties of the process itself? The process is very hardworking. It's a lot of paper, lawyers, bankers, auditors, calls, and you still have a company.
Exactly. I think I will probably ask the help from the compliance team here, but but no, certainly. I mean, it's definitely a process that starts many years before, right? As you said, when is the right timing? So when that question comes in within the company's employees and within the company's strategy, I think at the end of the day, this process starts many years before the actual IPO structure is in place. So, well, the process is definitely troublesome, I would say, right? I mean, you have to comply with so many laws, and then, like, why NASDAQ, right? I mean, why the US? At the end of the day, I think the laws in place that have to be compliant with are much more flexible in terms of business savvy. So, I mean, all of this process needs to be streamlined before, during, and after the process, and employees have to, not just the board, right? The employees themselves need to adhere to this plan, and this has to be followed through very, very fiercely. And then, as we know, there will be due diligence, there will be analysis from the regulators. So the process itself, once the decision is taken, certainly it's very, as neat as Jean said, it's a bit of a nightmare, right, Jean? Yes. I guess you can comment better than me on this one. I guess you have experienced what 2 times already?
Yeah, no, I cannot agree more.
Yeah.
And like in the case of the US, like I remember when I was at Zoom, you have to get approval by every single state. And the night before the IPO of Zoom, we have not received approval from New York. New York has a reputation of being very difficult to grant approvals. So we went down to the wire. And as Guilherme was saying, everything that happened before the IPO, but then what happened after the IPO? What happened if your stock price dropped? You have the institutional investors. They're not happy. So they're driving you crazy. And then you have a lot of companies that more or less offer the same product, more or less. Everyone has great compliance. Everyone has a great network. The irony of the network is that we all use the same network. So you have to be different in order to be able to survive. And then you have the other challenge is how do you price the stock? And the benchmark that I use has always been Western Union. I worked for Western Union for 10 years. But the challenge with Western Union is that the stock price has been, the last few years, between 18, 19 to 22. And then you have all these small companies that they are not making money, and they want to price 3-4 times above Western Union. So then you have the big wake-up call when the price of the stock goes down. So it's a very complex process. But as you know, my two colleagues were saying before, it's something that all companies want to do. I have traveled for this business all over the world. And when I talk with private companies, they all want to go public. But it's extremely complex and extremely, extremely expensive. You hire the bankers, let's say Goldman Sachs, that's another deal for them. After they close the deal, they move to the next deal, and then you have to deal with the day-to-day after the company goes public.
Oh, thank you. Just about the lawyers, when you hire them, it's an investment. It's not really an expense. And
yeah, but then you have to keep them hiring.
and no, I believe maybe you were only ready after the IPO, maybe because it's so complex. It is a process that takes a while, months, and you have the senior people at the company dedicated to that, which is crazy. In the end of the day, you still have the company, but the senior people. So, of course, there are differences. We have worked in the IPO of Nubank IPO, and then it's different. They are so prepared already. They have so many people. They brought so many people that it seems it's okay. It flows well. In other companies, the company is still small. You have 2, 3, 4, 5 key members, and they have to dedicate time to building an equity history, talking with investors, lawyers, auditors, and still running the company. But yeah. And Gabriela, what do you think? Well, from my perspective, looking from outside, I believe the changes that are profound that are in compliance. Isn't it? Sometimes companies are still very, in Brazil, we would call a familiar group almost. So you do whatever you want. You have related party transactions that are nonsense, actually. What do you think is in your area, what would be the changes that are necessary?
Yeah, that I agree. So within compliance, at least in my area, that means regulatory compliance, data privacy, AML, so onboarding, transaction monitoring. It means ethics and integrity. It means so different things. So what I can say, at least in common in all of them, it's governance. That's one thing. So how decisions are made, what are the steps you need to take internally. So to have a very robust governance organization, I think that's something that you need to work on that before going public. Otherwise, decisions are made and you don't really know how decisions are made. So that's a big differentiator factor. And from regulatory compliance, I think it's another huge part of the preparation because it involves so different types of regulations as well. So as a fintech company, that means from payment regulations, financial regulations, but also anti-corruption regulations, anti-bribery regulations, avoiding financial crime, all related financial crime regulations, trade law, all of those regulations. So you really need to look inside with a different point of view and kind of see if what you design is ready for this next stage. So that also means redesigning processes and implementing them, because it's not only designing, right? You need to be running and implementing those processes when you decide to go public. Otherwise, it's much, much harder. And what is very interesting is that it's a very dynamic process. So it really, as I said, it starts also with the IPO, because then if you get more investment and you grow more, that also means more controls you need to put in place. So if you go, let's say in my case, last year we grew more in more African countries, in more Asian countries. Those are different realities regulatory-wise as well that we need to sit down, understand, and be able to comply. So the funny thing is that after the IPO day, so after our CEO ring the bell and everything, the company was like, okay, now back to work. Because there's no actually a lot of time to say, okay, this is done. It's not it's not something that you go public and you close a chapter. It's just the beginning of something.
It's a start. Isn't
It's
it?
a start. So it's like, let's go back to work. That now we have much more to do. So that's interesting. It's a preparation, but it's an ongoing process as well.
Maybe just
I would like to add something. Internally, two things change because you have to make sure that the employees are trained in compliance. And then you have all these never-ending compliance training programs. And then what do? You have to run the business and you have to do the compliance training. And if you don't do it, there are problems because you have to report that to the regulators.
Yeah, you need to train even before.
Yes.
Yes. Yeah, exactly. So, and this is definitely one of the key points is to have all the staff aware how to manage material non-public information, to really understand how communication is flowing inside, outside the company, how you should handle yourself before authorities. So it's really a different type of work, although certain regulations are applicable anyway, but you have a much higher scrutiny when you are a public company.
I'm glad that you took this path on the conversation, because if I could give one advice for a just listed company, would be careful with trading. This could be, even in Brazil or in the US, it is a crime, insider trading, and it's very difficult for a lawyer to prove something like, how can I prove that Guilherme didn't know something?
Exactly.
It's extremely difficult. So it is something that you have to be careful. And so Guilherme, please go.
No, just a bit off track, but an interesting issue. I'm not sure if you guys have watched the show We Crash on Apple Plus recently.
I haven't, but I've heard.
It's really interesting, and then it comments exactly what we're talking here, right? So like all the process of IPO, of WeWork going into IPO, and what happened during this process, like, and some compliance issues that had within the company. I mean, that's what the shows forecast, right? And that's what, according to this true story that they are being based upon. So, like, there is a whole, like, the company has to be transformed as the Goldman Sachs, as the JP Morgans of the world enter into the company, and, like, they do a huge a scream of the processes and papers and documents, and then they find a few things they're not happy with, but then like the company is don't worry. So you know what I mean, like, and then at the end of the day, the end of the story is like the IPO didn't happen because of some practices that weren't really in accordance to what let's say in Brazil a Novo Mercado would ask for, So a very interesting process to analyze.
Thank you. And Jean, how do you think it changes the communication of the company with the market and with the society as well? I don't know. As a Brazilian, I see that when a company goes public, it changes. Like even the entrepreneur become more famous. The company is then what we call a vidraça in Brazil, in terms of it starts receiving critics a lot, and you are in the media. So how does it change with investor, with media? What would you do in this next stage for a recently IPO'd company?
Well, everything changed. First is that you go through some media training. And what you're being trained to do is not to answer the question. That's exactly what you do. And I have some partners, especially in Southeast Asia, that they call me and they ask me, hey, Jean, do you think that's the right time to invest in your company? And my answer is, I'm not a financial advisor. I cannot give you an answer. But they are so blunt, and I don't think that they want to do anything illegal. It's that it's from a different cultural perspective. And we, the three of us, we run a global business. So we have to be sensitive that it's not that they want to do something wrong, it's that they think that's normal. But I cannot tell anyone information about, the performance of the company that I'm working for. I have to, just look at our last earnings report. And then they want to know when is the next earnings release. I said, well, a press release will be going out. Just check our website. And it's easy because if you look at the Western Unions, MoneyGram is private now. You see that's part of the nightmare. What happened to MoneyGram? They will become private again. And then 3 weeks later, they got fined. So it's a good company. So coming back to the issue that it's not a simple process of being a public company, but the communication changed, and then the founders or the CEOs, they need to focus on running the business, what you were saying before, because you are accountable now to the board of directors and to the shareholders. And it's very simple. At the end of the quarter, you deliver your numbers or not. we can talk about your great ideas, but if they're not profitable ideas, we're going to fail. So change in the communication.
You said something, I think in Brazil and the US are different. In the US, the rules are very strict on talking with investors and about earnings, and it's basically what you said. It said, well, look at my earnings, we're gonna talk about the past. In Brazil, there's more, the regulation's more subtle, and I believe analysts and bankers and even the companies, they do have more conversations during the quarter, which sometimes is our regulator does not like. So I think in the US it's very black and white. You cannot talk about future in the end of the day. That would be I believe the advice of an American lawyer.
And also, I don't know how it's in Brazil, but I like it, at least in the US, when you're hired, and the companies and public, you sign tons of paper saying that you're not going to be disclosing any confidential information, and then some companies, they ask you to sign a non-compete. And that's also becoming very controversial, because you can move from one company after an IPO to go into another company. Yes. But the courts in the US, they have dictated, especially in the West Coast, California, Oregon, Washington State, that non-competes are illegal. But then you go to other states that they can enforce a non-compete. So it's very complicated, but you have the rules of the games are very clear. Personally, I like that, because if you're crossing the line.
Exactly, and I guess to add to that, I mean, this process of change after the IPO, right, in terms within the company itself, sometimes, okay, as we said, it can be difficult. It can be difficult to adhere to. You have to have a team trained. But on the other hand, like, it also creates and triggers a source of transparency within the company, because this has to be streamlined from top to bottom. And then as Jean said, like, you have a obligation towards the shareholders, right? Towards the open market. So I guess this creates a source of transformation within the company that in sometimes can be a good and positive and brings new oxygen to the company itself.
Okay. And Guilherme, just one of the things in the tech IPOs, I have worked, I'll say only public things that I have been already public. A disclaimer. And the tech companies, they do face an enemy. I believe in Brazil it's stronger, which is like cybersecurity. How do you handle that? So I remember, I don't know if you have read at the time when Stone was during the year IPO, they were blackmailed. And the pricing day, or on the closing day, they were blackmailed by a potential ex-employee, which said, well, I have still stolen some data from the company, and unless you pay whatever, I think it was like $1 million or $2 million, I will just disclose all the information I have stolen from you. And it was not true, but Stone had to disclose this fact, that they were blackmailed. And you see in Brazil, in the media all the time, this data has been leaked. And I think this environment changed a lot. We have the LGPD in Brazil, the data protection law that is new. And how do you handle that in this environment? What kind of threat is that?
Yeah, I guess that talking about Brazil specifically, this has been a field that was always in the corner, right? In the past, like if you analyze like 5-6 years ago, it was like, oh, that specific,
will arrive.
Exactly, that specific issue, oh, don't worry, we'll sort that later. Okay. But in the economy of today, where information is the most valuable asset of a company, like if you analyze companies like Google, they basically live on information processing and data. So like, and then as you said, I think in Brazil we managed to actually put a leadership in terms of in Latin America, for example, in terms of discussing this issue very, very fiercely, in terms of both sides, right? In terms of a company and also in terms of the consumers. So when you are processing this data, whether you are an IPO status, whether you're already public, whether you're willing to go public, whether you're a seed A company that is fighting to strive within your market, I mean, information has to be dealt with the utmost priority today. Like, for example, even in crypto, right? For example, if crypto is well, the name itself is cryptographic. Supposedly, you're not meant to have hacks and all of that. But recently, a project has been hacked, and I think it was 800 million, something like that, was stolen.
I think so, yeah.
So like, as basic information as that is so serious that all your value that if you're willing to go IPO, you can lose this in a question of seconds, right? So your most valuable asset has been stolen. So what are you now? Like in the world of today, information is everything. So how will the public trust your company? You know, so
it can ruin the reputation forever, isn't it? So it's a very important subject. I think I would say that in all public offerings, disclosures, and documents, you have something about cybersecurity. It became such an important topic. You have, during the process, you're going to have calls. Your cybersecurity team are going to have to participate in the IPO diligence process. So it is something to have in mind for an IPO. And Gabriela, would you say are the most important threats that the management is worried about during this process? Market, I don't know, pricing, or what else? I don't know.
What I have noticed, and of course this is with my compliance lens, is as we were speaking about trade regulations. So it's very interesting when you work in a fintech where data and information flows very organically, because it's part of the innovation process to be exchanging ideas, exchanging data, and kind of thinking together, brainstorming together. It's part of the innovation DNA of the company. But then, as we were talking before, once you go public, you need to really see how data is flowing within and without the company. So you start putting processes to what was before a very organic flow. So certain reports will not reach everybody in a company anymore. So you, of course, that should not and will not change the DNA of the company, but you kind of need to rethink how you're going to keep the innovative DNA under this new playing field. So I think that's one concern that I see. It's really to be very compliant with trade law, because again, as we were speaking, in the US it's very black and white, so you really need to be very careful of the limits you need to play within, let's say. And the other 2 points, I cannot stress this enough, it's regulatory compliance, because it's we do see, especially in the fintech spectrum, that a transaction, a flow, cross barriers, right? It's not within one jurisdiction. So I might be, I don't know, a company might be giving payment service to a user that is in Nigeria. You are located in Europe, and the merchant who is actually rendering the service underlying the transaction is in the US or is in Singapore. And so there is a type of unity that brings together all of those jurisdictions, but the laws and regulations are not necessarily harmonic, because we are not talking about something that it was thought to go together and to be connected. We are thinking about a country that's taking into consideration their own systemic risks, their own protective measures, so they will focus on their risks that they need to protect as a regulator, and they will address accordingly to the reality of the country. And those are very different realities if we think, in my example, US, Nigeria, Singapore, and Europe. So you really need to be aware of what is the applicable regulation under your business activity, so you are able to comply with everything that can go through that day-to-day operation. And third, last but not least, when we also talk about fintech, we need to be very, very careful to not be a vehicle of money laundering, terrorism financing. And this is not theoretical, right? Like we see the Ukraine war, we see the terrorism attack in Brooklyn, US. So it's something that, and if we think about emerging markets, we also know how drug cartels can be very active. So you really need to have robust controls to make sure that you are not facilitating at all any type of financial crime. So this is again, it's a huge effort that you need to undertake. This means very robust compliance processes, a lot of systems, a lot of intelligence, a lot of ways that you can monitor outside the manual human work. It needs to be automated. You need to inject technology. You need to use artificial intelligence to the highest standard possible in order to be sure that the systemic risks of the countries you are in are being controlled and mitigated to the most possible extent.
Okay, thank you. You know, we are only talking here almost about risks and costs and regulation, and I remember that almost as an anecdote, but it actually happened. I was in a meeting with a founder of a company, and lawyers and bankers were talking about regulation, costs, etc. And I said, why I'm going to do an IPO? And one of my partners went to the board and just wrote, $1 billion. That's what you're going to have after the IPO. So just not to also forget perspective, because I think
that's what you're expected to have.
That's true. That's true. That's the sell, isn't it? Yeah. And Jean, but if you have that $1 billion, what are the skills that you need for the next day of the company? How? What you would expect that changes? Do you bring people from outside, and it will change compliance, etc., etc.? But what else you need? What are the new skills? I believe you need new skills after the IPO.
I think that what you do is that you invest for growth, but that's a nice sentence. But how do you do it? You have to develop very clear strategies with very clear targets, and the people that you hire. Sometimes you get all these people with beautiful resumes, but they don't understand the business, or sometimes in the case of the US, they don't travel overseas and they want to work internationally. You have to hire people that they're willing to go and do the work. If they need to go to Nigeria, you go to Nigeria. What's a big deal? Nothing is going to happen. Or if you need to Vietnam, Laos, because the perception sometimes is, and these are highly educated people that you hire, is that it's a crazy world outside the US. And it is not. I have been to 171 countries. And even once I have been robbed. Nothing have ever happened. You know, we're talking that I have been to North Korea and Iran. You know, I go, not for business to North Korea, I went on vacation. But nothing happened, but you have to go and see the reality of the market. It's like this morning, I went to Starbucks before coming here. Not a single person paying cash. Not a single person, and I was there for about half an hour. You go to the US, and it might be 50-50. So there are some societies that are more advanced than the US. But talking about compliance, also when you deal with partners, like in my case, I deal with partners around the globe, like small countries and in small markets from a remittance perspective, Cambodia and Laos, you know, $500 million. In the scheme of things, they're big, but they're not that big. They have to understand that now you have subject to a different type of regulations, that your network, the connectivity that you have with them has to be raised to higher standards. So you have to go and find payers that are like financial institutions, like banks, because they are more stable. And it's easier when the regulators come and they ask me, hey, I need to see your file with X bank in Laos or Cambodia. When I give them the file of a bank, it's different than when I give them the file of a small fintech. You have no idea how many, especially in the case of Vietnam, small fintech companies that they contact me that they want to do business with us. You know, we talk. And my first question is compliance. What kind of compliance department do you have? Oh, well, we don't have a compliance officer at this point, so forget it. Or when I say, okay, send me your compliance documents. Well, they're coming next week and they never come. So it's very complicated, but with $1 billion, you can really scale and you can be a global business if you make the right choices. Yes. But what are the right choices? And also the positive is, like, I have been at NASDAQ for the 2 IPOs, the Zoom and the Remitly IPOs, and it's a great feeling because you know that's going to happen. Also, it's a great feeling, when you see the price of the stock go up. And then, if the price of the stock come down, it's not a great feeling.
Yeah, I'd like to add to that, to those points. Right. I mean, different companies have different profiles, and of course, this gets streamlined for the profiles and the culture of the company in terms of who it hires, right? And I guess that this is a very interesting question, like in terms of previous IPO, normally, depending on the company, whether it was born to sort of value, whether it was born because the founder wants to do the exit. So I guess these questions have to be analyzed. And so for example, if you are in a company that is willing to basically create value through the valuation, and then of course your employees, your like, heads have to have a different mindset, a mindset towards that specific type of growth. But then, and I guess this is probably an interesting point to be analyzed after IPO, and why maybe some companies are not performing very well. And then, because like when you go IPO, the story is different, right? Like you have an obligation. I mean, it's not yourself anymore. Like you do have to comply with rules and regulations. You do have to comply with, I mean, the investors have to keep on trusting your business, the way you do business. So I think the mindset sometimes needs to be adapted to this whole new culture. And then, but that's the problem, right? So how do you change the culture of a company of 10 years that has been very oriented towards valuation, like, but now the story is different. Like you already have the valuation, you have to perform, you have to deliver, you have to mature organically and sustainably, and then like, so this equation is not very easy to manage and balance after the IPO, I guess.
Yeah. There's another point. The valuation is on paper, because then the market is the one that's going to dictate what is your valuation. And then also another point is that you have to be able to change if you need to change, like after the Russian invasion of Ukraine. You know, a lot of companies, we have to shut down our business in Russia. And in my case, I was trying to work out some deals in Uzbekistan, Kazakhstan, and Tajikistan. The first question is, do you have business, any type of business with Russia? And if they do, I cannot do my business. So that projection that you had on your P&L, the numbers, they have to come for somewhere else. You have to be very flexible.
And Guilherme, just to touch on another point, that you have been through a SPAC IPO, or you know a little bit about SPAC IPO, and this is a trend. I mean, we have been hearing a lot in Brazil and in the US. In the US, I think we have had a trend. I don't know, hundreds of IPOs of SPAC companies. SPACs are special acquisition companies, and in Brazil, we are starting to hear that the regulation is changing so that we can have Brazilian SPACs, but we are seeing Brazilian companies that were going through the IPO now being targets of US SPAC or international SPACs. Could you comment a little bit on that? What do you think may be a little bit different and on the process?
Yeah, actually, just as a matter of fact, I wasn't at the company back then, but but anyhow, I mean, of course, we after the IPO and we are going through this process still, so I can definitely comment on it. But yeah, so the SPACs basically it's cheaper. Right, so you have an opportunity to go IPO without the whole, without the whole bureaucracy, without these high costs of hiring the banks like JP Morgan, Goldman Sachs, and it's a much more straightforward process because the company that you're merging with has already gone through this process. Of course, this is probably going to be passed through the cost somehow, but definitely it's much lower. So it's a much fast-forward process, and so like you don't have to do the whole let's say road shows. You don't have to convince, let's say, the market that your that your share is actually worth such a price. You don't have to move mountains, right, in order to get a minimum level of trade to that first IPO. So I guess this SPAC definitely is a very interesting process. I guess in Brazil, as we've been talking, this process is now emerging, but it depends on some sort of regulations. So I guess especially now as these interest rates are hiking, I think this is going to be a process here in Brazil as well, where capital is drained from the stock exchanges to see what's going to happen from here onwards. And to see and to double check whether SPACs are actually going to be a way out to leverage capital here in Brazil and in Latin America as a whole as well.
I think that's what Wise did. All transfer Wise.
Well, yeah, they did that as well.
Yeah, that's a good point. What do you all expect on now this new environment? How it affects IPOs and what maybe you can give some perspectives. Interest rates in Brazil are crazy how they fluctuate around time. And I don't know, we had this boom of IPOs just before the pandemics, but then during the pandemics as well. But now the environment is so different. What do you guys expect from now on? Maybe, yeah, you can start.
Okay, I'll go first. Yeah, I guess, I mean, definitely, if you analyze the correlation of the interest rates with the performance of the Brazilian stock exchange, you will see there is always like, it's negative basically, right? So, and of course the reasons are obvious, right? So when there's no revenue for your money, you go somewhere, right? So all this, let's say, venture capitals, liquidity that has been put into Latin America, I guess this is going to be a whole different chapter from now onwards. And then there's all this capital that has been put into the startups are of course changing the scope, or changing the environment, and the startups have to continue on growing, but they will need more capital. And of course, an IPO would be the way out, right? Yeah. But then now, what is next? I guess this IPO will have to be delayed. But how do you keep on growing? How do you keep your capital flowing, right? So, and as a result of that, we're already seeing a lot of startups actually doing some layoffs in Brazil specifically, due to this whole new structure which is being imposed upon them, which is a situation that they weren't really used to. Like, our interest rates have never been so high. I think in 2014, I think was last time, it was around 14%, something like that. I think
so, yeah.
So many years have passed, and many startups have been founded from there. So this is a whole new chapter that has to be surfed. Not sure what's the results going to be. I truly believe this is not a bubble. I think this is sustainable. But there will be a capital constraint. So companies will have to go through difficult times ahead, I guess.
I don't know if you guys want to comment on that. No?
No, yeah, maybe for those companies that already made the IPO, I think it's just keep investing in the intrinsic value of the company. So, like, you will continue hiring, developing technology. For those that maybe were making a decision, yes, as we were talking before, it's a moment to reconsider as well, and see if it's the right moment, which we just spoke that it's very hard to know if it's the right moment. But yeah, I would only add that, yeah.
We don't have much time, but I'm reading here, Jean, the panel is the NASDAQ Dream. And I believe it is, but what's your take, and maybe final takes, and if you guys want to have a final remark, please feel free.
My final remark is that, of course, it's a dream. But a dream is only a dream. There is a lot of work that goes behind making a company to be successful in the public markets.
And guys, I don't know if you want to have any final remarks.
Can also become a nightmare.
No.
I think we're just happy. I heard an alarm.
Oh, good. I'll make my words Jean's words.
Okay, great, guys. So thank you. Thanks a lot. Thank you, guys, for the conversation. It was really nice. Thank you, CROSSTECH, again.
Thank you. Thank you.